Good afternoon, Scott Rella, T3 Live. Welcome to today's recap. So today, finally, the Fed came out with their statement. I think the expectations were a lot lowered considering the fact that I know that our data has not been so robust, but it really hasn't been disastrous. GDP came in as expected, ADP was okay. Everything we get is somewhat in line, a little lethargic, but really not, I think, where you can make excuses for another QE. Okay, the indices in the stock market, S&P's up like almost 9-10%, Nasdaq's up 12% with 2% off the highs. I don't even know how they would be able to justify it. I think that the Fed would get abused by maybe different the freshman Republicans or whatnot. So anyway, they came out, didn't change the language. They said we're here, if you need us, and market tried to hang in there all day until finally at the end of the day, a little bit of a sell program came in, and we closed near the lows. Overall, we're still in the top third, if not a little bit higher, of that range from when ECB came out with the news that they would do whatever it takes to save the euro. And I don't think the market will be as friendly tomorrow if the ECB just does absolutely nothing. I think that they have to do some kind of purchasing, some kind of LTRO type of scenario where they will be buying some of those bonds that, in Spain, Italy, or even say that they plan to and give dates when they're going to start. So even if they don't do it tomorrow, which they might not do it, but instead of just a framework, they'll give a timetable. So if they have a timetable, perhaps people will try and front run them and get these yields that are higher, knowing that they will come through. So either way, as far as the action is concerned, it's very, I would say, not say hit or miss, but you have your haves, you have your have-nots. Lately, it's been even that much more explicit to where weak stocks are just continuing to be sold off, and some of the better ones are hanging around, and there's really not that many A+ setups. If you look here at the chart of the S&P, you'll see that here is where it looked as if we were breaking below the low end of the range, and that's when Draghi came out with those comments last Thursday. You had a nice powerful move through, and ever since then we've been slowly pulling in, very slow, very methodical. You take a closer look here. We really, we closed what about 1376, which is that upper area that I spoke about, right around 1374 to 1376, and here's your 8-day moving average. So all in all, still holding up. The question is this time going to be different? And I hate saying that phrase because it hasn't been. From the low to the high, to almost the low, to the high, to the low, to here, we stalled. This time we got above that, almost to the high end of the range. And question is, will we continue to hold in the upper end of it for then some type of continuation, into just say the highs? At this point, we don't really know. Some stocks are worth holding, some are worth shorting. If you're having positions, you need a hedge, but I would think that, this area will be very, I would say you have to watch it. So if you want to take a step back to measure the speed, I tried to do this yesterday. I would say you take your fib retracements from the low of this area to the peak that we saw 3 days back, a little bit higher. And overall, the commitment to this past move, where we didn't hold the 25%. When you hold the 25%, that shows pent-up, crazy momentum. You better hurry up and get involved in things because we're not going to wait for you. You start to break the 25, you come into the 0.38, which is 1368. That's still considered very strong. That's still considered commitment to this previous move, but you don't have to race. You don't have to buy the first pullback. You have to be a bit more selective in your prices. And then here, you even have the 50% move, which is somewhat strong still. And then, lately, this 0.618% move or retracement is what's been holding. And that's right around when everyone starts getting as pissed off as possible because you have no follow through, and then everyone switches gears, and that comes in, and look where that would be. That would be, coming into the lower end of this channel. So we would continue to be in this channel instead of bracing on the way out. And at this point, there's really no reason for us to break out and go nuts to the upside, considering, we're not in a blaring bull market. The earnings have not been unbelievable. They've been okay. Second quarter earnings expectations have been lower. Some things have been beat up. Some things have held in there. So there is spots. I know some guys covered their shorts. They were a little upset with me. Oh, they're like, I covered my shorts in Starbucks yesterday. Big deal. I didn't trade it once today because it didn't give you a reason. You had continuation to the downside, closed near the lows again. Tomorrow, it'll be probably an A play type of setup where I think that, maybe we get some type of red dog reversal through this 43.70. But overall, broke below. This was that lower pivot, continuation below 46.12, continuation below yesterday's low of 45.09. This is why you don't catch a falling knife. You wait for some type of reversal strategy. You wait for a reversal strategy, at least you have points of reference. Facebook also, no reason. We tried it once long today, it did nothing. Okay, here's your, the bad earnings, broke below this prior pivot, which was what, 25.52, tried to hold in there, broke below this low, looked decent for a second today, and then it failed. Got stopped out, tried it, lost a little bit, and now we'll see. No one's holding this and averaging down and taking pain and saying Facebook's going to be a winner in 5 years from now, because that's not what we do. We test levels. And at this particular point, it's still in no man's land, and it can go a lot lower. As far as Apple, there was a few calculated trades today. You had, fourth up day coming into 617, 1620. I almost felt like I was guilty shorting it there because, it's just been so strong. And anytime you've shorted in the last 3 days, it just didn't work, but it was the right thing to do. I don't think anyone in the office tried to buy it there, even though that was the level. But coming from, 570 to 617, you can't be a buyer the first time there. So made some decent money in the virtual trade floor in the first few minutes, shorted Apple around, I think, 616, covered a little early. And then we actually had a nice little buy, at the gap, and then it closed weak. So, we could see a little bit more back and forth type action. If you look here, I actually drew this level this morning, saying I'd love to see it stall, into resistance, which it did, and hold sideways and hang out up here, which would be nice. And then at some particular point, it could blast off through this 617 to 620, and then we could really try and just hold it till it at least gets to 644. If you're a macro investor, stay the course. I do think that the highs of the year are not in. You could see, plus 700 on this thing. Let's hope that September launch is the real launch. There was some news today that at AT&T, they're not pushing the iPhone, sell everything but the iPhone. I kind of doubt that. Again, you look at the chart here, we have some new points of reference. I think you could trade it versus this area, versus 603. Probably could take a few days right here. If it keeps this gap open, you're going to see still a lot of pent-up momentum, and the speed will be really fast. It could try and come in that gap a little bit, as the 8-day and the 21-day move up, and still be fine, considering where it came from. So at this point, the momentum kind of broke. It broke through this prior high of 611.70, came back below it, but held the gap, and now just a little bit of range trading. Kind of like what happened here before it broke higher. So that would be healthy, and I think that would be, have a better setup for us. I sent out, I don't know why, I'm just anticipating, and it's probably nothing, but I bought a little Yahoo today. Some of the other stocks within that group are acting okay. I keep staring at this thing, and if you look here at Yahoo, you'll see it's really no reason to be anything more than a tier 1 as of now. It did come up to the upper end of this range. Still hasn't been able to really break out above it yet, but it did break above this minor resistance, holding these, the 8 and 21 day. You have a really big channel here, okay, of some institutions accumulating this thing. This new CEO's in there. Maybe she got her options. And again, being a tier 1, I'm not going to look at it, and I'm not going to add to it until it tries to break above this 1620. Above 1620, you have some room here. So something to do. My stop's going to be 1570. The low of the day was 1581. If you take a closer look here, you'll see this 4-day flag is right here, which it's holding, this top third of. Here's your 21-day moving average. In order for this to stay strong, I would say that it should hold above this, keep some kind of momentum pent up. I guess this would be a spot to cheat a little bit. If it starts getting above 1607 in the next session or so, perhaps that's where you're at. But really, it's got to get above 1620, and you have to see big volume. I don't know what it's going to take, but again, this is a big channel, a lot of pain here, a lot of consolidation, and perhaps there's value there. You look at AOL, big move to the upside. Comcast had a big move that everyone's watching the content on the Olympics. Maybe rates are higher, a lot of less people watching TV. Who knows? We shall see. Right now, just something small to potentially to do. LVS last Thursday, we talked about a capitulation low. had a nice 3-day move, got stopped out yesterday, this morning. Saw the Macau numbers. I bought it a little bit below 37 and change, or actually 30, it was like 36 and change, thinking that perhaps it can continue. If you look here, again, I think that there is a trade here that can continue. Here is your, that low. Now it's trying to hold higher. I think, like tier 1, maybe a little bit more above this 38.29, or really this first here would be 37.50. It can continue back to bigger resistance. The stock has been battered and bruised from 60 and change. You look, at the volume here on that day, which was the reason why I started talking about it again. I haven't talked about this thing in so long. Look, the volume off the lows, held higher. Now it's going sideways. Perhaps through here, you at least fill this gap here. The gap fills 40.65. So, again, something calculated. You have a point of reference. I'm just looking for things to do. It's August. We need to make some cash flow. And keep moving forward. Google couldn't get through the momentum level. It's still fine. I just think it needs time. It's trying really hard to, to flag up here right near this resistance. For me, I know with Google, I'm not a macro investor in Google. I'm not a big hedge fund with billions of dollars. So I'm trying to trade the trend here. And if you have the wherewithal, you could be a buyer versus this 628. So this way, you're buying it in the hole, and then you could add when it gets above this 640, 642, but it hasn't done it yet. So for me, I tried it today. I'm not going to try and swing this until it starts getting above this area. And then, again, it's August. I don't want to make it too complicated, but overall, if you're a fund and you're watching this program, and if you're a macro investor that are looking for great stock picks that you could hold for a while, I do think that Google's weekly chart, the monthly chart, it all looks really good. And at some particular point, this thing could be over 700 this year. All they need is one more decent report, and this thing's going to probably be even at historic highs. So with that said, also, gold kind of sensed that Big Ben wasn't going to do anything. Same old gold, failing right here, at this trend line once again. You look at this box, gold continues to be in this box. You have big support, 148.5, hasn't been able to get through this area, which was, that 159. Tried to break above this small little trend line, still hanging by a thread, but without QE, I don't see any reason, that people are rushing, to buy gold. So we'll see what happens here. See if it continues to hold this macro support or it changes character. But for now, major downtrend in front of it, intermediate downtrend still in front of it, and it's just a choppy no trade driving people, or bugging people out for you gold bugs, which I apologize. It is what it is. So with that said, tomorrow is going to be important. I don't think if Draghi comes out and it does nothing, the market's going to be as friendly. He had some strong words, and he squeezed a lot of shorts, and there are a lot of pissed off sellers out there. So he's going to have to come out and do something, with a backbone, I think. Obviously they need to put something together, but they also need to make sure that these nations that are not following the rules, that are not curbing their spending, that are not, practicing austerity, they have to follow the rules. You can't be Greece and you can't say, I want another deal because I want my guys to retire at 50 and I want to let them run their underground, economies with cash off the books and not try and not police it. There has to be some kind of accountability in Greece and Spain and Italy, all these places. Someone's got to pay for something, and it can't always be the taxpayer. So I do think that Germany should continue to play a little bit of hardball to make sure that you don't give out free lunches everywhere, but they have to do something to buy a little bit more time and see how this whole euro thing takes form. It's going to take time. It's going to be a different animal. It's going to change many times. It's probably not going to fall apart. Maybe one or two members do fall out of it. But at this point, I think that they're committed to it and they've said it, and it's just now it's time for action instead of just strong language. So we'll see what happens tomorrow, and hopefully it won't be such a complicated day. But we shall see. Some guys are trying to take positions. Some guys are just tactically being in like the cash overnight so they could play the ranges, and there's something for everyone. So at this point, just make sure whatever you're doing is something for you. So Scott Rella, T3 Live. Oh, tonight I will be hosting CNBC Asia for an hour. So if you have CNBC World Markets, I'll be on from 6 to 7 o'clock our time, which is 6 to 7 o'clock their time. There will be 3 different guests that I have to ask questions to, and it's a pretty cool hour, so I'll try and post some of those links later. Have a good night.
Hello everybody, my name is Pete Renzulli, Chief Marketing Officer of T3Live.com. I'm really excited about introducing you to and inviting you to the first T3 Live Active Trader Summit. There's going to be a ton of great content, but the #1 reason you want to come is you want to be able to network and associate with other like-minded people who have a burning desire to learn how to be a trader. So I'm going to ask you to make a trade. Trade one Saturday for some of your time to come down and learn strategies, tactics, techniques, and put some faces to the people that you see in the virtual trading floor in T3 Live, and learn to take your trading bigger. Learn how to be a better trader than you are now. Learn the strategies. It's going to be a lot of fun. Go to T3Live.com and register. If you would like to join us at the post-event cocktail reception, you can also upgrade to either premium or VIP. That's up to you, but either way, please take advantage of the general admission, 2 free tickets. Bring a friend, bring a neighbor, bring a wife, bring a girlfriend, maybe bring both, but come down and expect to have a great time.